Southern California, AM 1220 KHTS. This is Fred Arnold, and I'm joined by Steve Schaefer. Steve Schaefer is a reverse mortgage specialist with American Family Funding. And welcome, Steve.
Thank you, Fred.
Beautiful day, huh?
Happy to be here on a Halloween day.
Yeah, Halloween day, end of the year.
Yeah.
Finally starting to cool down a little bit.
There you go.
And with the end of the year, it becomes changes in the mortgage industry. And I wanted to bring you in to talk about changes in the reverse mortgage world.
Yeah, probably you may have heard, a lot of people have heard, that FHA did some changes to reverse mortgages beginning this the first Monday in October, October 2nd. And what they did was they reduced the ongoing mortgage insurance premium from 1.25% to 0.5%. That is huge over the long term of the loan.
Well, the bottom line is it reduces your monthly cost, right?
It reduces it reduces the rate at which the interest accumulates on the loan. So over the life of the loan, if you have it, 15, 20 years, that is a huge cost savings on the reverse mortgage. At the same time now, we have to say that they did reduce the lending limits a little bit. So you need a little bit more equity. Used to be about 50%. Now you need a little bit more, closer to 55 to 60% to make it work.
But the reduced cost every month
yeah.
really saves the consumer.
And what it does is it preserves that equity. And I know, in the years that I've been doing this, a lot of people are concerned about leaving a home with some equity in it to their heirs. And this is kind of a benefit for those cases as well.
Yeah, big change.
So a big change, but I think it's a good change.
Well, you have a couple examples, right?
I got a couple of things, yeah. And I think we were talking earlier that there are different ways you can take funds for the reverse mortgage. One of them that a lot of people don't know about or clearly understand is a home equity line of credit, where you can actually take out a line of credit and it will grow over the years, and you can kind of use it, access it when you need it for extraordinary
Now, that's
expenses.
an interesting concept, Steve, because most home equity lines of credit, for $100,000, for example, you can tap into it. You have to make payments on it, right?
Exactly.
They're variable rates, and they're, with most big financial institutions or credit unions, you go get a home equity line of credit. But in this case, the home equity on the reverse mortgage increases?
It increases because it's not directly tied to the value of the home. It's also tied to the age of the person. And as you get older, the older you get, the more money you can access. Yeah. The beautiful thing about it is there are no monthly payments required. So a lot of people are doing, taking the equity line of credit, no monthly payments. It can't be frozen, and you're not, locked into it. I mean, it will grow over the years.
So you had an example recently.
I had two that I want to, one from recently and then one from a few years back, show you how it turned out. I had one, a gentleman caring for his wife in their 70s, and he could see that she was kind of deteriorating, unfortunately.
Need additional care.
Yeah, and he really couldn't do it himself, but they weren't at the complete point yet. So he established a line of credit that he can use in the future, so he can kind of pull out when he needs it. Now, this has got tremendous advantage because when it does come time that he's going to have to be bringing someone in, he doesn't have to pull the money out of an IRA and have some tax consequences. He can use the equity in his home.
Not only the tax consequence, that could be the safety net.
Exactly. The other example goes back a couple of years ago, but then it actually comes to recently. About 3 years ago, I helped a couple who had a standard equity line of credit where they were making the payments, and then, of course, it reset after 10 years when they have to start paying principal.
Home equity lines of credit, the typical ones, after 10 years, turn into 15 or 20-year variable rate paybacks.
Exactly. And they got a big boost in their monthly payment, and they were, panicking. I worked with the daughter and the family, and we were able to do the reverse mortgage, convert it into a reverse mortgage. We paid off the existing equity line of credit where they had to make payments, and then established a reverse mortgage line of credit. And the husband was concerned that he had some health issues, and if he were to pass on, how that could work in the future. Sadly, the husband died last year, but the wife was able to take that line of credit and convert it into a monthly payment, which basically made up for the Social Security payment that she lost when her husband died.
The reduction in...
A lot of people don't know that when a spouse dies, you lose one of the Social Security payments.
One of them, yes.
And the husband wanted to protect his wife in that case, and we worked it so she could do that.
Wow.
So
really able to make a difference in someone's life, especially when they're so concerned about every penny that's coming in the door.
Exactly.
Yeah.
Exactly.
Well, thanks for sharing that information. Those who want to reach out to you to do the analysis, to have the analysis done on exactly what they can do on a reverse mortgage, how can they reach you?
Just call me direct, 661-505-4308, right here at American Family Funding in Santa Clarita. You can email me as well. Real simple, steve@affloans.com.
Or go on the website, AFFloans.com.
Go on the website, AFFloans.com. And like I said, I'm live and local. Come out and meet with you, and we'll kind of work up a good plan for you.
Love that. Live and local. Steve Schaefer, American Family Funding Reverse Mortgage Specialist. This is Fred Arnold on AM 1220 KHTS.
The stress was unbelievable. Debbie Morris is a changed woman.